Welcome back to the channel, and welcome back to another episode of our weekly price action journal. Now, before we get started, I just want to say that there will be times where I'll have to put this onto Be Right Back, and the reality is it's because I've got a real tickly cough, and rather than coughing down the microphone, I think it would be more beneficial and just generally better manners if I just put this on, Be Right Back, cough till my heart's content, and then come back. So just wanted to make you guys aware of that. So if you look at the chart, you probably notice that there isn't anything on there. So in this edition, we are going to do a full version where I'm going to mark up the charts as we go. It's been a long, busy weekend, and typically I would like to sort of do this Saturday morning, where typically I'd mark up the chart, maybe even make some notes, and then I'll record it for you guys a bit later on. But that's not the case. Or certainly I would just mark up the charts and then I'll discuss everything with you guys as we go. But that's not going to be the case today. We're going to do everything as we go now. So you're going to get the sort of raw vanilla edition of how I do this. So with that being said, let's get started into this. So we've got the daily chart here. We're going to start on the daily. There's nothing really special with the weekly, apart from we had this big bullish candle, engulfing candle from last week. So there's nothing really important to, or there's nothing to really give us any insight there. So I'm going to start on the daily chart today. Now, because of that weekly candle closing bullishly, I'll be honest, my view was we may see a slight pullback into the upper half of the candle, of the weekly candle, and then a continuation of higher prices. Okay, so that would be my initial thought going into the week. I don't like to chase tops and bottoms. So again, if the general trend, institutional order flow, is supporting higher prices, then I'm going to want to remain in alignment with that. Now, that doesn't mean that all of my trades that I take is in alignment with it, but it just means that probably high probability setups are likely going to be in that direction. Okay, so as you know, with me by now, I don't trade Mondays. I like to see how Monday sets. So following Monday's price action, we had a view that we could see the market trade lower. Now, first things first, to mark up, let's make this a little bit larger. So the first things first is this. Let's do it like that. Let's make sure this is the daily. It's this area here. This is the first aligned BISI, and as you know, I like to look at aligned PD arrays, especially when it comes to imbalances. So, and then we've got this one down here, okay, which ultimately the market traded into, but we'll get into that shortly. Now, following Monday's price action, this actually, let's do it this way. This candle is important to me to determine a potential reversal. Now, I'm not going to go into the reasons why. That's down to model and analysis and all of that sort of stuff, but some of you may already know. If you do, you do. But it's not important because other people have different means and ways of identifying reversals and so on. So for the purpose of this, I'm just going to call it that for now. Okay, so that was important, that candle. However, I wasn't looking at that candle in an isolated fashion. I wanted to see whether the market wanted to confirm lower prices. So as I mentioned, I was bullish. I was looking for bullish price action. Monday's price action I wanted to wait for. Why? Because I wanted to see the the opening of the True Week Open. So needed to wait for that. Excuse me. I did say I was going to put it on Be Right Back, but that was only a short one. So I wanted to see where the True Week Open was going to was going there. The key price level was going to form. So ultimately, so I saw this candle on Monday, True Month Open, and actually no, yeah, True Month Open as well. So we can see there. So I wanted to see, is the market looking to go lower and trade lower and close below this candle's key price level? And the answer to that question, actually, you know what? It's probably better if we just do. Yeah, that's probably better. Okay. Wanted to see if we close below this candle's key price level, which it did. So, for me, in order to confirm lower prices, I now wanted to pair this candle with a high time frame cracking correlation at the highs above the True Month Open and or the True Week Open to support and confirm the idea of lower prices, right? And we'll review on the 4-hour time frame, but this occurred between Tuesday and Wednesday. So we'll delve into that. So once I saw the higher time frame cracking correlation, my immediate attention now, we implement now IRL to IRL to ERL to IRL to you get the gist. And that brought this BISI. That became my focus for as a near term drawn liquidity. That BISI, this internal range liquidity pool, became my draw. Okay. So the key then was so we had Tuesday, Wednesday, we had continuation. Now I wanted to see how does Thursday's candle close, and as we can see, it closed below CE of this BISI, and that was the same on NQ as well. So that gave me the indication that we are likely to trade to a discount of this dealing range. Purge of the low, where we had previous SMT here, and the high, where I had confirmed potential lower prices. So now this becomes the dealing range, and once this had been essentially traded through, or at least given me signals. Now look, just because it traded below CE, if there was support at the lows, we could have seen higher prices, but I was confident, we'll say, that we were likely to see a continuation down into this larger BISI here. And if we're going to trade into this BISI, then the likelihood is we are going to trade to EQ of this range as a minimum, which then, well, you know, the first thing you'd say is, okay, well, what PD array do we see at EQ? Well, it's the BISI, but it's also CE of the BISI there. Okay, so that's what I was looking at. The fundamental premise of what I was looking at was originally continuation of higher prices. When I saw Monday's price action, and specifically that candle, I thought, okay, there's a chance here that we're going to see lower prices. Okay, well, I want to see a high time frame cracking correlation at the highs to confirm, and that high time frame cracking correlation above the True Month Open or the True Week Open or both, and that would support the idea of lower prices. Okay, now I will explain to you why I never actually took the trade, but we'll get to that a bit later. Okay, so that was the idea of the daily chart. So everything I've just discussed there, that's what we're detailing in. Okay, so let's drop down to the 4 hour, and I'm just going to quickly take a quick drink. I'm just going to put you on be right back because it'll probably make me have a quick little cough. Okay, I'm right back. Right, so dropping down to the 4 hour. Let's bring this down like so. Okay, so first thing. And then I'll cough afterwards. Great. Okay, so 2-month open. Monday's PA. Then note this. So Tuesday's high. Wednesday. Okay. Okay. So we have obviously got the. Actually, let's mark these up. Okay. So this is the exact steps that I typically take. I'm going to extend this back a bit, just. This one here you could classify as Q1, or you could, because we've created the swing point, entirely up to you. Let's call it that. Okay. And then take this one. There, so quite tight. You know, if I was, intraday sort of trading, I wouldn't have these two levels. I'd have the lowest one marked up, being as this one's in close proximity. But for the purpose of this and completeness, it's important for me to share exactly everything that occurs. And ultimately, if we're looking at Q4, that's Q4. Okay, we'll leave that one as that. No lows, and then we've obviously got more. Just want that one. That is Q3. And Q2. Okay. Right. So. Okay. So I'm going to be making some narration here on this one. Is there anything else that is important for me to note here. I don't think so. No. The only other thing would be actually is probably this, yeah. It's not that significant to me, if I'm honest. Excuse me, not that significant, but nonetheless, yes, nonetheless, it's important to. Well, nonetheless, it's worthwhile marking up. So as mentioned on the daily TF, the market. Actually, as mentioned on the daily time frame, following Monday's PA, the market indicated that we could see lower prices and an external range liquidity to internal range liquidity in the form of the BISI daily. In order to confirm those lower prices, I wanted to see an high time frame cracking correlation at the highs to support lower prices. So essentially I wanted to see a model form. Okay, this occurred between Tuesday and Wednesday at the highs, where where following Tuesday's PA, the market repriced higher above the true month open and true week open, supporting the idea of high probability shorts. However, failing to purge the previous day's high whilst NQ did. This formed the high time frame SMT at the highs, supporting the lower prices if confirmed on the lower time frame, or in fact I say lower time frame, on the lower time frame, that's fine. Okay, the market then repriced lower to close Wednesday. Excuse me. Before trading back up into the bearish high probability OBH4, before displacing aggressively lower for the remainder of the week, violating the first aligned BISI daily, this one, before trading further lower into the lower aligned busy daily, and more importantly into, or should I say not more importantly, and equally importantly, into a discount of the range. Okay, so that's pretty straightforward. Now there is something that I've missed which I need to note. Where I've wrote displaced aggressively lower for the remainder of the week, purging the previous day's lows whilst also violating the first aligned CB daily. Okay, so you can see there's no significant fair value gaps or anything over here. Price is relatively balanced in terms of words and downwards movements. So there we go. Copy that. I'm just going to paste that into our notes. Okay, so now might get a bit tricky on this, but let's see. No, not too bad. Okay, not too bad. We've probably got a little bit more room. There we go. Okay, so let's just clean a few things up. That there. There is actually do want now what I'm marking up here. I was looking for a continuation, but it didn't present the opportunity, so so there's no trade. Other elements of my trade idea, unfortunately, oh God, I didn't want to do that. Unfortunately, didn't come to fruition. Therefore, there's no trade. But it would have been a lovely trade had it done. So now we can come here. Okay. Right, so we want move this across. I think that's fine. Bear with me, I'll be right back. Okay. So we're going to focus on Wednesday. Well, we will focus on Wednesday. So we can see on Monday. Let's get some annotations up. So again, stick to your models or the key features that you would typically annotate. No need to do something necessarily just because you've seen me do it, unless it makes perfect sense to your model. Then that is fine. Okay, so all of that is fine. Going to Tuesday. Again, wouldn't have necessarily, this wouldn't have been anything, but these are the things that I like to see on the chart. They're important to me. Let's just have a look at, yeah, so we've got and there. This wouldn't have too much, but important to note. Let's go with that. Okay, so we've got that there. Now the key day, Wednesday. So we had this. Now I'm going to explain why I didn't take the trade, and I also noted this in my weekly ASR, and you know it kind of polarized view, which is fine. But I think sometimes certain things matter more to a trader. So can't see the refined SMT in here, but that's neither here or there. Okay, so what we've seen is that the market ultimately traded. Let's just let me put this in. This is all important stuff, so take your time with this process. Don't try and rush just to get it done. There's a lot of learning to be had when you evaluate the previous week's price action, so don't just jump ahead. Okay, so market opens, trades lower, and I'm actually gonna let's just note some stuff. Actually, I wanna do this properly. I don't wanna sort of skip ahead. So let's just do some stuff here. Okay, so with Monday. The market opened and began to reprice higher to form the BSL LDN. Okay. I then noted the market consolidate before purging the BSL London. Oh. And then repricing higher. Sorry, repricing lower. Okay, so okay, that's pretty much it. So what we're saying here, market repriced higher gradually. Set the BSL London. We can see this consolidation in here. Price trades up, purges that, and then we see this retracement or repricing lower all the way, and then closes out the day. Okay, so pretty simple stuff for Monday. Yeah, pretty simple stuff, right? So now Tuesday, I noted the true week open key price level following the true day market open, if you will. Okay. And then ultimately the market consolidated, forming the BSL London. Okay. Before repricing lower to form the SSL LDN. We can almost sort of indicate some kind of seek and destroy day, but for seek and destroy, I mean, there's all these flashy names, seek and destroy, and so on and so forth. The reality is, it's just a range. That's what it is. Okay. So the market then reprices higher, purging the BSL London during the New York AM session before displacing lower to purge the SSL London and set the, bear with me just 1 second. Apologies. Where are we? That's it. And set the low of the day. Okay, so we're here now. Okay. Before retracing back into the daily range. Okay. That's it for Tuesday. Pretty simple. Nothing. And on those 2 days, I didn't really do too much by way of trading. Now remember, this is a bank holiday on Monday. So kind of explained the price action. But nonetheless, it's a bank holiday, so it was a do nothing. Tuesday, there was no news. Okay. Wednesday, we had CPI. So let's just mark that in. Okay. Again, important. Okay. There we go. And then on Thursday, naturally, afterwards, PPI. But we also had some sneaky news towards the end of the day, which was Fed Chair Powell jawboning. Right here. Okay. And then I'm just going to mark it down as high impact news. Okay. So we're now into Wednesday. Okay. So again, so we have the market opens and begins to price lower to set the SSL London before repricing higher to set the BSL and prior to the CPI news. Okay. Market then trades lower, but fails to purge the SSL LDN. Now, if I recall, there was SMT here. Double check. But I'm almost... could be wrong. Excuse me. Oof. So where are we? Wednesday. Where are we? So we want to see this low. Is it that low? Yes, it is that low. Oh no, maybe there wasn't SMT. Yeah, maybe there wasn't. Okay. Fails to purge the SSL London before the market manipulates higher, following the high impact news driver or news event. Okay. This manipulation higher formed an BSL or a BSL H1 liquidity pool. I think it's this where that there was SMT. Yeah, it was this. It's this here. That's where the SMT was. Okay. Okay. There we go. Okay, from the H1 liquidity pool before retracing lower to purge the SSL London, where I noted the low time frame SMT. Setting the stage for internal higher prices, or let's say intraday. Okay, right, so we are now here. Set the stage. We are now here. Set the stage for higher prices. Okay, so all this is during the New York AM session, which is important. It's important, right? And it's also within, you can just see this light green shaded area, that is my trade execution window. Yeah, okay. Actually should say 10:30. But that is fine. Okay. Yep, trade execution window for me that I've tested, back tested, and so on and so forth is 8:30 to 10:30. So the high probability trade setup will fall within that window. Anything outside of that is still possible, but it reduces in probability based on my models and my edge in the market. Okay, so that's important to note. Right. Okay, so the market then displaced higher, and we like to see that with speed to purge liquidity. Purging the BSL H1 liquidity pool, trading above the true week open and true month open, but failing to purge the previous day's high. This formed high time frame SMT with NQ, setting the stage for lower prices. Now, why didn't I take the trade? It was my model. So, one of the things that I like to do is, prior to taking the trade, I like to be in front of the market. I like to see how the market is shaping up so I can see what the behaviors are and so on and so forth. But I don't always get the opportunity to do that. And in this instance here, at the time of this, which was 1 p.m., so that's going to be around 7 p.m. UK time. So I had some family activities that needed to be taken care of with the kids. So I got back, and it just by chance I came to sit in front of my machine just to see kind of like what price had been doing, and I noted this setup here. Now, one of my rules presently set is that I take my trades during the New York AM session, not the PM, right? And it's one of those rules that I've been sort of wrestling with, because I kind of feel, well, you know, if you set up forms within a kill zone or trade execution window defined by yourself, then you should just take the trade. And I saw this happening in real time, and I was so tempted to hit the button, but then I said, no. Stick to your rules that you have set for yourself. And one of them was to not trade in the PM session. And the reason being is because I can't afford myself any consistency with the PM session, so that I really become intimate with price action and all of that sort of good stuff. So I typically just narrow my trading window to the AM session. So I saw this and I just said to myself, do you know what? No, I'm not going to break my rule. I will monitor price, I'll mark it up and so on and see what happens. And lo and behold, it goes to TP. So that kind of put me in a quagmire where I was kind of like, okay, well, in future, what do we do? If your model sets up, meets every high probability element and criteria to the model, what do we do? And the answer is you take the trade. So I have now redefined the rule, that I have a trade execution window for the New York PM session, which will likely be between 2 and 3. It's likely, but I will define that in more specific detail, but it's looking quite likely to be that. And if my model forms within that time window, I can execute the trade. So on one side of the scale, I'm happy with myself because I stuck to my rules. The other side of the scale, I kind of was disappointed that I didn't benefit, profit from the trade. But that's part of the forming rules that you stick to. So I'm happy that I stuck to those rules. But that's why I didn't take the trade. Okay. So anyway, moving on. The market then rejects lower. The market then rejects and reprices lower before the close of the day. Okay, so Thursday, following Wednesday's PA, where I had noted the high time frame cracking correlation, supporting the idea of lower prices. market opened. And began to reprice lower, setting the SSL London. Right, let's just, thought I'd mark that up, but I hadn't, so let's just grab that. Just that there. Now I do mark up sometimes the Asian range highs and lows, but in this instance, not necessary. Excuse me. Okay. Right, so then the market then displaces higher to set the BSL London before heading into the New York AM session, where it purges BSL DN. Now, here, if I recall, because I wanted to take a position here. Now again, it's about following your rules. And for me, I have specific rules as it pertains to this continuation model here as to why I couldn't take the trade, even though I kind of strongly suspected we could see lower prices. But at the end of the day, again, your model is your model. And my model has specific rules that I have to follow implicitly, and if certain criteria are not there, I just don't take the trade. And unfortunately, I didn't take the trade, and the market repriced lower, and it is what it is. That is it. Trades are like buses. So the market formed low time frame SMT with NQ at the highs before rejecting and repricing lower purging the SSL London and the previous day's lows. Okay. Right. So now Friday. Last but not least, Friday. So now that we had established lower prices, and at this point, the way the market price action had been, I was pretty confident we were likely to trade lower on Friday. I wouldn't have looked for longs, but I had certain key PD arrays marked up as to say, okay, if we see signatures from here, then we're likely to go lower. If we don't, then we are likely going to target the highs. Okay, so, and one of which was this CBH4, aligned CBH4. And so once I saw that, however, unfortunately I couldn't take this trade because, again, I have specific criteria to my trade model. And when one key criteria is not hit, for me, it's no trade. It's as simple as that. It's no trade. So I then looked for the continuation model, which never formed. So it's just no trade, and that is just how it is. Okay. So the market opened. So we're referring to now midnight New York, and began to displace. The market opened and set the BSL LDN. Now this is important. I haven't marked this up, so let's just do it now. I wanted to see the market purge this high, but from a 4-hour time frame, respect this SIBI. So even if it wicked, the bodies respect this SIBI. That's what I wanted to see. Had I seen that, I'm absolutely taking this trade. But unfortunately, that didn't occur. Therefore, it's no trade. Okay. So set the BSL London before displacing lower. Okay. Displace lower to set the SSL London. Okay. Right. So we better get that in. So let's get that. Like so. The market then repriced higher into the aligned SIBI H4, where I noted PDA SMT before the market then displaced lower into lower, purging the SSL London and deeper into the BC daily and discount of the range. Before seeing a small bounce to end the day. That's it. Excuse me. That is it. So, again, just recapping some stuff here that's important to the weekly journal. I can't emphasize enough that you'll see people will watch the backtesting videos, and I think the backtesting videos are really good videos for people to watch on my channel, and I know that the majority of those videos are no trades, and I know that most people will gravitate to the ones where it says plus what have you, and that is totally fine, and look, that's great, because I want people to understand the profitable trades. But what's equally important, if not more so important, are the no trade videos in why I did not take a trade. A lot of the time it's because my model did not present. Now, I'm not a trader who wants to trade every day on a very low time frame. That's not my style. I prefer a blend of high time frame narrative with a lower time frame entry, and that might yield 1, maybe 2 trades per week. I am okay with that, because you also have to take into consideration someone's personal circumstances. Mine, I'm a husband, I'm dad, etc., etc. Time is a premium, all of that sort of good stuff. But there are other people who have more time on their hands, therefore utilizing the lower time frames is probably a better mesh to their personality and so on. So that's all good and well. However, I say all of that to say this: the key elements to improvement will be found in your weekly price action reviews. that you can absolutely book it and take it to the bank. There is so much to be taken from this exercise. I can honestly say that I'm at a stage now in trading where I am just chasing profitability, and finances, etc., etc., profitability, finances, and so on, right? And all of that is derived. Sorry, I just saw something which is really interesting. All of that is derived by the weeks upon weeks upon weeks upon weeks upon weeks of carrying out this process. And I can honestly say, during all of those weeks, my processes have evolved immensely, but they've evolved immensely because my knowledge has evolved immensely. And I've worked out what I like, what I don't like, to the point where I have come away and built 5 models that's all I look for on a daily basis. That's it. If they present themselves and the criteria are there and they hit and they look, everything meets my criteria, then I'll execute the trade. My point being is that it's this exercise, and doing this exercise on a daily scale is what's going to formulate your improvements as a trader. Couple that, yes, with backtesting and live market experience and stuff, but you are going to see the biggest eye-opening moments when you sit down, you carry out your weekly price action review, and you reanalyze the market from a position of taking a step back. That's where you're going to see the biggest growth and gains. So whether some people look at these videos and think, I'll give these that is fine. Everyone's different, each to their own, and so on. But if I'm honest, there are times when I come to this process and I'm like, but once I start getting into it, I'm like, oh my God, yeah. Well, now I'm in the groove. Now I'm loving this. Yes, great. And you come away from this particular process of the week thinking, do you know what? Really happy with that. I've identified some key areas that I need to improve in, some key observations, so I'm going to make some amendments to my models, my trading plan, and so on and so forth, and I'm going to execute accordingly next week. This process is going to highlight those things. So I say all of that to say, focus, put in your best work when it comes to your weekly price action reviews. Look at how you can improve them on a week-on-week basis. And more importantly, once you've gone through Monday, Tuesday, Wednesday, Thursday, Friday, you want to have a note at the bottom, just bullet points. What were your key takeaways from the week? Document them down and add them into whatever necessary process is required. So hopefully you've taken something away from this. I hope, as I said, I hope you guys have found this really insightful. There's, packed with a lot of stuff, and hopefully you've taken away something that you can add to your processes and procedures and so on and so forth, and ultimately drive positive change to make you guys improve traders. So I'm going to leave things here. Again, hopefully something useful. By all means, if there's something useful that you've taken from this, drop it in the comments. I'll be keen to know. Now, I always say this, I'm not answering questions when it comes to models and stuff like that. That's not important. Everyone's going to have their own models and so on and so forth. But there may be things in here that you have some synergy towards that is helping you improve yourselves as a trader. That'd be really key to see. And as always, if you found anything useful in here, please, all I ask is just a like. Just a like. If you want to subscribe to the channel, please do. Excuse me. And on that note, I will catch you guys in the next one. Thank you.